Good day traders and welcome to today's video. Today we are going to discuss the very important element of trading, which is the trading plan. We're going to discuss how we can develop a plan and why it's so important to have one in the first place. The first thing that we need to do is we need to ask 5 very important questions. The first question is, why do you want to trade? The obvious answer is to make money, but the successful trader takes this much deeper. Are you trying to get a profit threshold that will allow you to leave your day job and trade from home? Are you retired and want to stop digging into savings to live, so you want to trade to make up for that? It is vital to know what you want trading to provide you with. What is your strategy? This one is by far the most important. We must be as detailed as possible here. In other words, when exactly do you buy and when exactly do you sell? How exactly do you handle stop losses, manage risk, targets, and so on? The strategy must be able to determine where price is going to turn and where it's going to go. This means accurately quantifying supply and demand in a market. What markets will you be trading? This one again is very important as everybody is different. There are many different products you can trade at OneUp Trader, so understanding how each one of them move is very critical. By knowing your goals, lifestyle, account size, personality, and so on, it is easy to get on the right track. Number 4. Which account size are you going to trade? You must know if the particular account size you choose at OneUp Trader is going to meet your needs as a trader. Drawdown and max position size are the most important factors when making this decision. Having position sizing parameters and account sizes set in stone in a trading plan helps give you the best chance with the lowest risk. And then finally, the 5th question, how much time do you have? This again is a very important question. This will determine whether you will be able to trade for a few minutes or a few hours. Neither is right or wrong, better or worse. The key is to make sure you put yourself in the best position to succeed, and depending on when you can watch the markets or do your analysis. This question goes deeper as well. For example, if you have plenty of time and want to be an active trader, we would still never recommend that someone sit in front of the screen all day. The best active traders make their money in early mornings, and there is a specific market reason for this. The reason a trading plan is important is because to be a successful trader, there needs to be several skills a trader must possess. Here is a list of the skills in no particular order. Trading system, which includes our technical analysis and reading of charts. The correct mindset, so this is our trader psychology. Risk management and trade management. This is when we decide if we are going to trail our stops and overall how we are going to manage our risk per trade. Then we also have our goals, what we want trading to provide us. Tracking the success of our system. This is a vital element and is exactly why it's so important to have a trading plan. And then getting a system or strategy that fits your own personality. All of these pieces are critical to a trader's success, and if one or more of those elements is missing, it will be difficult for a trader to achieve profitability on a consistent basis. The trading plan is vital because it puts the entire package together. A trading plan helps the trader ensure that they are not missing any one piece of the trading puzzle. It is encouraged to go back to the basics and review your plan. If any element is missing, then add to it so you can complete the puzzle. The other reason a trading plan is critical is because it enables traders to adjust the plan if it is not working. If you are not measuring the success of your system, then you are not able to adapt and make changes if it is necessary. To track your system correctly, you must follow the plan exactly or else you get bad data, and when it comes time to evaluate, you will not be able to make good decisions. If you track your trades correctly for a designated period of time, then you will be able to make adjustments to you and your system and to test to see which method was more profitable. This moves us on to the next section, which is the important components of a trading plan. Number 1 is skill assessment. Are you actually ready to trade? Have you tested your system by paper trading it, and do you have the confidence that it will work? Can you follow your signals without hesitation? Trading in the markets is a battle of give and take. The pros are prepared and they take their profits from the rest of the crowd who, lacking a plan, give their money away through costly mistakes. Number 2 is mental preparation. How do you feel? Did you get a good night's sleep? And do you feel up to the challenge ahead? If you are not emotionally and psychologically ready to do battle in the markets, it is better to take the day off. If not, you will essentially fail at trading. This is guaranteed to happen if you are angry, hungover, preoccupied, or otherwise distracted from the task at hand. Many traders have a market mantra they repeat before the day begins, and it gets them ready. Create one that puts you in the trading zone. Now for number 3, which is set our risk level. How much of your drawdown should you risk on any of the trades? It can range anywhere from 1% to as much as 15% on a given trading day. That means if you lose that amount at any point in the day, you get out and stay out. This will depend on your trading style and risk tolerance, but it's best to keep dry powder to fight another day if things are not going your way. Set goals. Before you enter a trade, set realistic profit targets and risk-reward ratios. What is the minimum risk-reward ratio that you will accept? Many traders will not take a trade unless the potential profit is at least 3 times greater than the risk. For example, if your stop loss is a point loss per tick, your goal should be at least 3 points profit. Set weekly, monthly, and annual profit goals in dollars or as percentages of your portfolio and reassess them regularly. The next one is to do your homework. Before the market opens, what is going on around the world? Are overseas markets up or down? Trade preparation. Before the trading day, reboot your computer to clear the resident memory. Whatever trading system and program you use, label major and minor support and resistance levels, set alerts for entry and exit signals, and make sure all signals can be easily seen or detected with a clear visual or auditory signal. Your trading area should not offer distractions. Remember, this is a business and distractions can be costly. Set exit rules. Most traders make the mistake of concentrating 90% or more of their efforts in looking for buy signals but pay very little attention to when and where to exit. Many traders cannot sell if they are down because they don't want to take a loss. Get over it, or you will not make it as a trader. It's that simple. If your stop gets hit, it means you are wrong. Don't take it personally. Professional traders lose trades very often. In fact, they lose more trades than they win. But by managing money and limiting losses, they still end up making profits. Before you enter a trade, you should know where your exits are. There are at least 2 for every trade. First, what is your stop loss if the trade goes against you? It must be written down. Mental stops do not count. Second, each trade should have a profit target. Set entry rules. This one comes after the tips for exit rules for a reason. Exits are far more important than entries. A typical entry rule could be worded like this: if signal A fires and there is a minimum target at least 3 times as great as my stop loss and we are at a support, then I will buy X amount of contracts here. Your system should be complicated enough to be effective, but simple enough to facilitate snap decisions. If you have 20 conditions that may be met, and many are subjective, you will find it difficult if not impossible to actually make trades. We must remember that each decision is based on probabilities. Keep excellent records. All good traders are also good record keepers. If they win a trade, they want to know exactly why and how. More importantly, they want to know the same when they lose, so they don't repeat unnecessary mistakes. Write down details such as targets, the entry and exit of each trade, the time, support and resistance levels, daily opening range, market open and close for the day, and record comments about why you made the trade and lessons learned. Also, you should save your trading records so that you can go back and analyze the profit or loss for a particular system, which are your drawdowns. Perform a post-mortem. After each trading day, adding up the profit or loss is secondary to knowing how and why you took the trades. Write down your conclusion in your trading journal so that you can refer to them again later. Creating a trading plan is very basic to do, but yet many traders avoid it. It will always be in your best interest to create and stick to a trading plan and adjust it as necessary. The plan should rule out emotions while trading, only if we stick to it thoroughly. This is just one example of the many strategies you can use at OneUp Trader. In fact, there are no restrictions on how you can trade with us. If you have what it takes, then you can be fully funded within 15 days after signing up. Look through the various testimonials, trading interviews, and funded trader withdrawals on our YouTube channel. You can find everything you need on our FAQ section, and you can speak to our support team, which is available 24/7. Track your trading performance using our advanced account analytics feature. Discuss trading ideas with other traders on the members area and Discord trading room too. Don't risk your own capital in the markets. Rather, prove your trading ability with OneUp Trader and enjoy a risk-free funded trading account. Click the link below or go to oneuptrader.com to find out more.